In this video, traders, we're going to look at early versus late entries, what's the difference and which one's the best. Stay tuned. Hey traders, warm welcome to you. So, what's an early entry, what's a late entry, what's the difference, and which one's the best under specific circumstances? Let's have a look. So I've got for you 4 different scenarios. First one is a double bottom, or it's about to be a double bottom. Number 2 is a head and shoulders, traditional head and shoulders, or it's about to be almost completed. Number 3, we're going to have as a bearish engulfing candle. And number 4, we've got a pullback after an uptrend. Let's have a look at them. Let's have a look at what an early entry is, what a late entry is, the pros and cons of both. So let's have a look at the double bottom, for example, now. So a double bottom, and I've kind of used this one as a slight variation of double bottom, if I'm perfectly honest with you. This is where we've had a low round here. Let's call this A, so you get confused with 1 and 2. And then we've had another low tag B. And the setup is that we want to wait until that low gets taken back out again, and then we're going to go long here, right? It's pretty classical setup, a slight variation. Many people will trade the double bottom literally just on the market touching that level and pushing up, but this one's a little bit better for this example. You see why in a second. So the idea is we want to wait for it to pull back, cross back through that low, and we're going to long at that low price, whatever that low price is, and forget about stops for now, but your stop will be under there. Pretty textbook, pretty self-explanatory. Right, so an early entry would be to take it before the signal fully completes. That's the broad sense. So in this example, you'd be buying perhaps here instead of here. You know, a late entry, and I say late entry, you know, we can say late, we could say correct. They're kind of interchangeable. I think the real key here is this early part, because the early part is when you're jumping the gun, and I'm labeling it as late because even though it's late, it's almost like you have to have the confirmation to get it. So we'll see, it makes sense in a second. So there's your late entry, there's your early entry. Now, the advantage of an early entry, of course, in this scenario is you get a better price. You get to buy the low, and if you're correct, you've saved yourself whatever that might be on your chart. If you're a swing trading chart, maybe that's a couple of dollars. If you're on a day trading chart, maybe it's 10, 15 pips, whatever. So that's the benefit of it. However, the downside of the early entry, of course, is you don't know if you're going to be right. You don't know if you're going to be right anyway, and that's not really the correct statement to say, because even if you have a late entry, it doesn't ensure success. If it did, we'd be going full net worth margin on every trade we knew was going to work, right? But we believe that if we have a little bit more confirmation, a late entry, so to speak, then the odds are more in our favor, because in this example, we've seen price push back up. We've seen the market actually show a little bit more strength after the weakness. And so that gives us more encouragement to take the trade. Plus we can frame the risk as well, but forget about that for now. So if we take this early entry, yes, if it works for us, it's great. But the offset of that is this could not work and go lower and lower and lower, and we've got no way of framing that. The point of the late entry, if you like, protects us from this just ripping through and it literally just being a lower low, don't know where it's going to go. It gives us a little bit of protection. Same if we're trading double bottom, we're waiting for the actual tag rather than jumping the gun, because we want to see that it's actually doing what we say it's going to do. So the advantage of somewhere number 1, early entries, obviously we get a better price. Disadvantage, of course, is that we have the probability of success goes down. So we've got to decide whether that's suitable for us with this setup. Now, number 2, traditional head and shoulders. A little bit different this, because this is the actual pattern hasn't yet even completed. So that's our neckline, if you like, and traditionally we're going to go long as the market pushes through the neckline. That's the textbook stuff. I'm not a huge fan of this pattern, but it is what it is, and it's good for this observation. So there's our left shoulder, there's our right shoulder, there's our head, and the traditional trade of this is that we go short as it breaks through here, go down, we extrapolate the head down, there's our target. But an early entry would be jumping the gun a bit and taking the short trade here. Okay, so there's the short entry, and the idea is that we're jumping the gun and we think the momentum's going to break through anyway, but we want a bit of a head start. And again, if that's swing trading, maybe that's $2 if we're trading a US share. For day trading, maybe it's 50 ticks, 20 ticks, whatever it may be. Now, the advantage of that, of course, is we get a better entry, we get a better head start, and if it's got the momentum, we've read that correctly, we've almost got a free $2. Disadvantage is the pattern hasn't completed. Now, of course, one thing I didn't mention, guys, the disadvantage with the late entry is that we are really paying up for it. We're really chasing in a way because a lot of the move has perhaps already done. And that is why I wanted to put these variations of setups and things on here, because it does depend on the setup you're taking. For something like this, you know, yes, if you can read it and maybe you get a wick here that doesn't quite cross over, that might be just the signal we get. So it's still early in terms of the whole sphere of the setup, but it's still got some reason to justify your entry rather than just standing in front of it. Same if you look at here, you know, maybe the momentum is so strong coming down here for whatever reason that you can front run it, you can get the head start, and the momentum takes it through, and there's no need to wait for it. But in some other circumstances, you might have to wait for it. And in other circumstances, you might even have to do a later entry, which might be waiting for a pullback to the neckline because of circumstances of price. This is what I want to kind of get in tune with you here. Okay, number 3. If we look at number 3, we've got a bearish engulfing. So our green candle, and assume this one is our engulfing candle here to the downside. So there's our move to the downside. Now, the point with this one is that for it to be a genuine candlestick, it has to close below the low here. Now, if we're jumping the gun, and let's say we've still got half a day left, and this is what we've got at the moment, but we haven't actually closed here, the candle is looking like that, the candle could still turn into this shape of a candle. We could have that, which wouldn't be a bearish engulfing at all. In actual fact, that would be quite bullish depending on what happened prior to that. So this is the sort of thing that an early entry might not be in your best interest, because you almost need that close, as opposed to some of the others where, you know, especially if they're intraday or they're intra-week and they're just part of a broader chart pattern, and not as important as the close, which is the agreement on almost the auction process throughout the day. You know, that closing price there is super significant compared to this. A lot more weight is on that price than it is a few ticks earlier, a few ticks later. Yes, the pattern might not complete, but in the big scheme of the market, the whole market doesn't go, "Ooh, that pattern's just completed because it's 15 ticks. We better do something different." It's not that relevant to it. So something like this, an early entry, isn't really going to be effective for you, because you need that timestamp of, yes, this is the entry, bang, this is where I'm going to go in, bang, this is actually now the pattern is correct, and then taking the trade. A late entry would be waiting for the close, and a later entry would perhaps waiting for the next day's open. And of course, if you are waiting for it, then in this circumstance, you almost must do, because you want to see that. If you've taken the early entry, you're not really taking the pattern, you're just second guessing and hoping that it's going to close down here. Okay, number 4, what have we got here? This is a pullback, and an early entry might be, okay, well, we decided to take a pullback here. A late entry might be when it breaks that little lower trend line, that's when we're going to go long. Same kind of thing with this, guys. The earlier entry may well be okay if you've got something else to add to it, but otherwise, you're just second guessing the trade. Now, I recognize that you can't wait for every single thing to line up, because if you do that, you're going to be too late. If you're like, well, I want to see strength in this, I want to see this, I want to see that, I want to see everything lining up and matching and being perfect and really cherry picking. Rarely the best trades are those anyway. The best trades are the ones where you take a little bit of risk, you jump the gun a little bit, but it's finding that sweet spot. You know, and this is the point of the video, guys, is, you know, it's not black and white of the late entry is better, the early entry is better. We can see the difference of what we could label early or late, but it very much depends on the situation we're in. If we're in a really volatile, extreme environment, who cares about 15 ticks waiting for that to break through? If this thing's hammering through the lows and it's nearly there, it's, you know, you can jump the gun and it's not going to be any difference whatsoever. If it's over a longer time period, it's very, very slow, then maybe you want to see that level break cleanly and even wait for, you know, a later entry, because the importance is not on the momentum, it's on the break, because it's such a solid level that's been in play for so long. And again, depending on the situation, the price action before it. Same with this kind of thing as well. If it's super aggressive momentum pulling back, you know, maybe it's so high you want to be careful, you feel like it's chasing, it's a 4th or 5th pullback, and so you want to see that it's actually confirming. You don't want to be early to it. If it's the first pullback after news, then maybe you're happy to take it early, happy to wait. So what I wanted to emphasize, guys, is the context of where you see this stuff. No context. I bang the drum so much about it, and I wanted to touch on it in this point and say, hey, because we talk a lot about early entries, late entries. I see traders talking about all the time, oh, I was late that entry, I was early, well, I shouldn't have taken that early. It matters where it happens, and it That doesn't have to be a problem taking an early entry. It doesn't have to be a problem taking a late entry, as long as it matches the conditions you're trading, the structure you're trading, and the setup you're trading. All right, guys, leave your thoughts in the comment section below. I'll see you later. Bye-bye.